Hi, this is Randy Finney with the Right Side of the Chart, and today's Friday, March 31st, 2017. Time to do another update on the cannabis sector. For those of you who've been members of the site for some time now, you know that I've been beating the drums on the cannabis sector for quite a while now, well over a year. We've had, quite a few trades, mostly unofficial trades in the trading room, a lot of videos I'd put out, and there one of the reasons I'm doing this video for a few reasons. Number one, it's been a while since the last update. Number two, there are some recent technical developments. I'm seeing some movements, some breakouts in some of these stocks, some pullbacks to support, objective levels to add. And again, you can reference any of the old videos. They go back a while. They're all on the YouTube channel or on the site. And the other reason I'm doing this is I'm hearing buzz within the trading room. There's at least one, maybe two cannabis ETFs. Something I said is only a matter of time. This is a sector that has, as I maintained, has tremendous growth potential. Even though cannabis is still listed as a Scheduled 1 controlled substance in the U.S., and that's right up there with heroin, crack, etc., meaning it has no currently accepted medical use, there has been a very clear trend of states within the United States as well as countries around the world legalizing cannabis for both and or for recreational and or medical use. And that's a trend that's only going in one direction. I can't think of any states or countries that have legalized it and then repealed that. So it's a one-way trend. It seems to be snowballing, gaining strength. Whether it happens under this administration, the Trump administration, or not, I can tell you this. I mentioned this on the site. I put this up before he was even appointed. Jeff Sessions is our Attorney General here in the U.S. Very anti-drug, anti-marijuana, but and has a lot of power. He wields power over the FDA. So we'll see what happens there. But again, to me it's just a matter of time, and ultimately it'll be legalized in the U.S. Now, even if it's not, these countries are up and running. And there's a lot of these are Canadian cannabis companies. These are a mix of growers, distributors. Some of these companies aren't directly, they're not selling cannabis as is. They're integrating it into drugs, various uses. There's all different types of companies here on my watch list. It's been building. I have a total now of 38 stocks within that watch list. So we're just going to go through these real fast. I've made it clear for well over a year now, my approach, even though there's these ETFs coming out, I prefer to take what I call a shotgun approach. It's really building my own ETF. These are still speculative, small, mostly a lot of these are penny stocks. Some are, worth a few bucks or higher. But for the most part, these are speculative companies in an industry that's in its infancy, early stages. There will undoubtedly be winners and losers, and therefore the whole benefit to buying an ETF or mutual fund is diversification. You can do that on your own because these stocks are cheap. Brokerage commissions online nowadays are as cheap as $1. I trade it. I have various brokerage accounts, Interactive Brokers. You can buy commissions are $1 depending on what you're buying, $1 or $2. So you can spread your money out into small lots of these, and I like to buy and sell strategically. Now, what that means is I'm going through these charts. If I don't outline every support and resistance level, you can see them on here. I have trend lines. I have any horizontal line. If it's below current prices, that is a support level. As I go through these charts, since I haven't had a lot of time to update it, I'll highlight levels here. I don't always have the numbers shown. I have to click here and show value, but you can just replicate these charts or drop me a line if you're a member of the site. Drop me a line in the trading room and I'll be glad to give you more details. So, all right, let's dive into the charts. Enough on that. That's the backdrop to the sector. Again, most importantly, there will prove to be winners and losers. I would strongly suggest not to just try to pick one stock and that's your favorite. Spread it around. You'll never know which ones of these will explode and which ones will implode. There will be winners and losers, and when you're dealing with penny stocks, low price stocks, companies with questionable fundamentals, operating at a loss, unproven management, et cetera, et cetera, et cetera. This is all just investing 101, and these are both trading opportunities. We have had a lot of swing trades on these, officially and unofficially, and they're also investments. You know, you can keep core positions in your favorite stocks, and again, I like to strategically add and reduce exposure. What do I mean by reduce exposure? Well, here's ENRT. We'll start with this one. You know, had a divergent high right here. You can see the negative divergence down below. You can see a bearish rising wedge there. It broke down, and you know that was a drop of 68%. So, you know, it was a long-term position. And I'm not saying that I sold here and bought here. I don't even recall. I have so many of these stocks. But there's one at that point, at the very least, you wouldn't be adding. But you might look to add, you know, take profits if you were in down here, and then maybe add back when it hit any of these levels here, these support levels. That one right now, it's strong. This one's here. It's about to power. It's challenging. It's all-time highs. I believe that's all-time highs. We've got to go back. No, it's actually back in 2014 had a blow-off top here. But the chart looks good. It really, if it can get above this level, you can see this reaction high back here from 2014 as well. That was the recent reaction high. So that's really your next breakout level. And I don't see any divergence right now. It certainly has a potential. If I take this wedge uptrend line and I extend it, maybe it does make a marginal new high. And at that point, there might be some divergence. So be careful. But again, you have to define your trading style, your objectives. Do you want to swing trade these stocks? If so, you have to be nimble, very fast, because I mean they rise and fall. Here's a drop just back here. You know, this thing fell in just a matter of days or weeks, 64% or more. And then again right here it shot up in just days or weeks, 170%. All right, so you guys get all that. If you don't get it, stay away. And most importantly, don't put any more money in these stocks than you can afford to lose, especially if you're not disciplined with your stops. And there's another thing to that too. You can't trade these like a regular stock. If you're normally comfortable with taking a 5, maybe an 8, 10% loss on a trade, a swing trade, and you try to trade these stocks running 8, 10% losses, here's my guarantee to you. You're going to get stopped out. You're going to have a few that run. You're going to hit it. But this volatility, these suckers move up and down 10, 20, 30% or more in a good day sometimes, or in a bad day. So, you know, you have to use what I call beta adjusted position sizing. Yeah, so whether you take 100,000 a position, 10,000, 1,000, $500, it doesn't matter. Take a small fraction of that, divide that number by 10 or more, and just sprinkle a little bit of cash. And again, it's cost effective unless you're using a high cost broker, or your portfolio is too small. Plus, if you've got millions of dollars to invest in the market, you can't put too much in these penny stocks. You're going to move the market. You're going to you try to buy it, especially at a market order, you're going to move the stock. All right, enough on that. But I think it's important, especially for those of you new to trading and investing, to know what you're doing when it comes to trading speculative low price stocks, especially penny stocks. All right, let's run through all the charts and then I'll wrap this up. GRNH, Green Grow. I mean, gosh, the trading ops, I've made tons of money on this one in the last couple of years. Long, mostly long. I've only had one or two shorts. This is a powerful industry, clearly in an uptrend. Occasionally, I'll short a pullback. Short trades on these things are capital burners, especially these penny stocks, meaning your broker will it'll just tie up so much margin buying power in your account to short these things because of the risk. They have high margin requirements, so I prefer to trade them long, just get out and sidestep the pullbacks for the most part. But I mean, the patterns, some of these trades so well to technicals. You can see GRNH. What am I looking at here? Look at this. There was a wrong tool there. There was a nice breakout of that bullish falling wedge pattern right here, breakout right here. So you had the initial thrust up, bull flagged, and then boom. And look at that, almost a perfect mirror of the flagpole once we broke out of that flag pattern. So the projected target was met, pulled back to support. You can see a downtrend line formed. I believe it was pointed out at the time this was a breakout level here at 05. We went long, or at least I went long. I know think some on the site did. That one ripped up. Again, you're not going to catch every low and every high, but what you can use these charts for, again, you look at these, here was an uptrend line. The stock recently broke that uptrend line. That was a warning sign. You can see how many days it tried to find support on that trend line, finally broke below it. However, it's come back down to that. This was a key level here at 6 cents a share, support level defined by quite a few reactions. If it breaks that and gives that up, next support is at 5 cents. I think this one would be a good buy there and a screaming buy if it ever were to get back down here. I don't know if that's going to happen. Down around 4 cents a share. That's very, very nice support. But again, it may not get that far. And if it does, then you buy it there, stop out below. Let's just move on to the next one. EDXC, Index Corp. All right, this one is flirting with an uptrend line. It had a divergent high recently. Now that divergent high did already play out for a correction, so that was a drop of 55%. Maybe that's enough to work off or to account for those divergences. Maybe not. It's in a precarious technical position because it's been hugging this well-defined uptrend line for a while now. With that being said, it's an industry in an uptrend, so it may just continue to use that uptrend line as a buying op. So, there's different ways to look at it. There is a horizontal price support just below it, about 0.0484. So you can go long on trend line support with a stop not too far below. If it breaks that level, I don't have support all the way down here at about 3.78 or so. Again, we're talking penny stocks, so there's a drop of 22%. And again, you just have to be willing to take those kind of drawdowns. And so what I like to do also, if you're new to this and you want to get in here, but you're thinking, wow, Randy, I can't, take a 20, 40% loss on a position. Partial position sizes. If you decide to throw, a few $100, $500, $1,000 into this stock down the road, you can buy a couple $100 here. If it drops down to that level there, add a few hundred more there. It should not go below this level. This is a very solid support, and if EDXC drops below that 2.5 cent share level, that is a very bad technical event. Another thing to note, just to make this clear, these suckers are volatile. You guys always hear me use the term momentum-fueled overshoot. See all these candlestick shadows, these long skinny parts, their tails or wicks when they're above, tails on the bottom, they're called candlestick shadows. The body's the thick part. Those are intraday spikes. And it's very common to see here, for example, I had a resistance level here. We overshot that and then came back down. Those are intraday moves. They're very common. There was a intraday break below the trend line, but prices closed back right up on it. So take that into consideration with your stops. If you are placing a stop just below a well-defined support level, there is a very good chance that stop's going to be run intraday. So you might want to wait on a closing basis or give it a fair percentage below. In other words, you just have to kind of, I'm not going to say completely hold your nose and jump in to the water. You have to have some loss mitigation on these, but you got to give them a lot of room. And again, the safety is in numbers, diversifying. And then, if we were to see it just smash on through this 2.5 cent level down the road and keep going, or print a very solid close below there. There's even a minor support level. You can see where these two candlestick shadows happen. There were quite a few reactions there. This would be the nail in the coffin level, in my opinion, right here, about 2 cents a share. All right, so enough on that. I'm going to go a little faster on the rest. You guys kind of get the gist. I just want to throw in, I think it's so important to put in not just here's the levels, here's some stocks I like, but how to trade these suckers, or you're just going to get whipped around. They're volatile little stocks, but tons of profit potential and upside potential. Just as there is loss potential. CCANs, Canadian Cannabis, CCAN, just a series, very thinly traded back here, but like everything else, you look down and you can see volume has been coming in. Again, this is a sector with a lot of interest, a lot of potential. This one's been in a clear downtrend, but it is tradable. You see these downtrend lines, boom, pop. There's a pop of, 104%. Downtrend line, breakout, pop. Probably another 100 and something percent. Downtrend line, breakout. This is not, I'm not crazy so far about this downtrend line, but there are a few reactions, one to watch, long-standing divergence. So this one may be a bottoming play, actually. It might have some potential there. CVSI, I like this one. I have a position in this one, long-term position. I have a lot of these, not all of these. I can't even tell you which ones. I know this one I've just tucked away a core position. There's the levels. I don't know what else to say. It's consolidating like a lot of these, and I've made mention. That's why I haven't done a lot of videos recently. We might be able to draw a little down. Yeah, we can certainly draw a downtrend line, and this looks like it'd be our next buy signal. Break above that downtrend line, and I wouldn't even think about a first target to about this level, and I could probably move that up, add another line right about here, the previous reaction high. But a break of that trend line, I think, could send this one easily up to that 66 cent level right there, and that's a move of about 61% or so. And then, of course, you can see the other levels I have here. So I do like this one as a longer term play, or trading up on a break of that downtrend line. Vape had an uptrend line, very well defined, broke that uptrend line. That was a warning, caution sign. At the very least, don't add when you see a breakdown. If you want to hold and give these things some room, you could have sold out of it, took profits if you bought it down here on the break of this primary downtrend line. It's so far, it broke this support level, but that level should really be lowered. Here's a previous reaction high. There's some reactions there, and so there's support. So here's one, for example. You buy it right here, and there's a support level not far below it, around 0.006. Next breakout level or objective entry is over this point. I'll have to hit the line here so you can see it, 0.0093, and this is a target zone. And if it can get above that level, it does have a reaction high here to contend with, but it's thin. This sucker could run, so let's say to be safe, over this level. It's blue skies above, very thin. You can look at the volume at price histogram. You might not be able to make that out on the video, but it's very thin up here. There's a lot of green and red bars here coming off the left of the screen called the volume at price histogram. So it runs over 0.335. And when I say runs, means probably a pretty quick move up. There's some stops along the way, don't get me wrong, but that's what I'm looking for on vape. CANN, I mentioned this one in the trading room recently on a break above. Well, first, actually, I mentioned it right here. Somebody asked me about it. I gave my opinion and then posted buying it later that day. It hit a low here of... sorry, a little distraction there in the video. Okay, it hit a low that day of 189. I think I was in at 191. So far, so good. It had a nice run. Now, the reason this is support. This pattern here is just a descending triangle pattern defined by this line and this downtrend line. That makes a descending triangle. We broke out, and now we're back testing. So there's your next objective entry. We had objective entry 1 here on support, which held. Objective entry 2 was a breakout above the descending triangle pattern. Now we're back testing it. So that's objective entry number 3 right here, right where we are, around 220. Stop should be somewhat below that. $2 is the support line I have, but we've had a few reactions go through there. And again, as I mentioned, these are usually intraday shoots, although that when we did close below that day, but not very far. So there's one that looks good there, and you can see the reactions. You can see where this line comes from. The reactions go all the way back here for years. This is a 2-year chart. A lot of reactions on that $2 level. So that one looks good there as long as that holds, give or take, within so many percentage points. Maybe a little divergence down there as well. TRTC, yep. This is a key support level here. We'll make that another color. Kind of highlight that for you. Look at all the reactions, 2 reactions there, reaction there. So as long as that holds, it looks good. But I like a lot of these stocks, and I've made mention, this is why I haven't done so many videos recently. There's been a lot of consolidation in the sector. We had these huge run-ups, and these were the ones we traded. And we got a couple of them. This is a lot of this was priced in. in the last year or so, these guys have certainly moved off the bottom, and they're basing, and they may have gotten ahead of themselves for a while. And again, each one has their own unique chart patterns. You just have to trade them. AMMJ, almost certain I pointed this one as a breakout here, and look at that phenomenal run that it had. 2,080% after that breakout right here, this downtrend line. Just a nearly straight shot up, had a well-defined downtrend line. I mean, again, some of these stocks trade very, very well to the technicals. You had a divergent high, see the negative divergence? So here's a good example of one that, we had an entry and reason to take profits. Targets were hit along the way. You could have taken profits at any of those targets, and at the very least, if you were holding on and saying, well, I want to hold until I have, irrefutable evidence, irrefutable bearish evidence that the stock's likely to pull back. You had that at this point here. The one thing about these stocks, guys, don't underestimate. They can run if and when the sector is hot. What you might think is overbought, these things are just getting started. So again, if that 2,000+% run in just a matter of months, couple months, doesn't illustrate that point, I don't know what does. So, in trading, unless you're willing to keep tight losses on your stops, let your winners run on these. Don't be so quick to take a 10, 20, 30% gain. Especially if you're allowing 10, 20, 30% losses, you're going to go nowhere. All right, so here's one. Since it broke down, we had a very impulsive correction. Doesn't look like much there, but that was 80% it gave back. It's a pretty big give back. But since then, the price action has been constructive. It worked off those overbought conditions. The divergences played out, and here's a stock that plain and simply has consolidated. And I talk about this often. There's two ways for stocks to consolidate. They can consolidate in price and or time, or both. This one did both. Had a pullback, consolidated. What now? Well, let's see. This looks like it's been dancing along this 66.15 level, 66 cents or so for a while. We had a few overshots at that support level there, grabbed at about 52 cents on those brief intraday, those spikes, and we closed back above there. So this has been a golden level. This is a level that's really been defended by the stock for a while now. If there's no buy signal yet, you're buying a stock that's been in a trading zone now for going all the way back to October or so. So it may be dead money for a while, but if you're looking for a long that might be objective, you can certainly go here. It's not too far above that level. You want to see your next buy signal would be a break above the top of the trading range right here. And then, of course, like any other stock, when you take out the previous reaction highs, that would be bullish as well. So there's your potential targets, levels. And again, if you're looking at these, tucking them away, then the price targets really at this point, especially on stocks that are making new highs, there are none. It's just the sky's the limit on these if you're going to put these away for a few years or more. And then as you can see, there's some key levels below if it breaks down back below there. All right, I'm going to probably wrap this video halfway through. I'm looking at the clock here. We'll wrap it up at 25 minutes or so, just because there's so many to cover and there's so many details. To do anything less, I wouldn't be given the full story on a lot of these stocks. I can't really make a very well-defined trend line out of this one. Little bit there. I'm catching a few reactions. Yeah, exclude that high. All right, this is the trend line I like. There's enough reactions there. Let's give it the benefit of the doubt. This is IIPR. So see, this is a REIT. This is what I talked about. I haven't done my due diligence and looked at the fundamentals, but I'm assuming this company isn't growing cannabis out of a in a grow house somewhere or out in a field. It looks like they're a REIT, real estate sector, innovative industrial properties. So they probably lease properties or own properties, whether they're grow houses, whether they're fields, whatever the cannabis is being grown, stored, distributed, but I assume that is related to the cannabis sector. I wouldn't have it in my watch list. So again, you guys can do your own due diligence. There's just too many. There are quite a few that I do read up on the fundamentals. I'd like to confirm that there's a fundamental story, a decent management place and team, but just can't do it on all of them. So there's some levels if that one breaks out. All right, one more and then we'll wrap it up and I'll do part 2 of this video. CBIS, Cannabis Science. What do you say? I mean, again, I must have been tracking this one all the way back here, and it has a very clear pattern of distinct downtrend lines, breakouts. These are, well, I just moved that line by trying to grab it with the measuring tool. Breakout ran 190%. Well-defined downtrend line, breakout, and it ran 120%. So this is a stock that is very tradable, works very well to the technicals. You can swing trade it. You just take it on a break of these trend lines. And what happened is we had a series of smaller downtrend lines, these white downtrend lines, and then this larger blue primary downtrend line. So what happened is pop, pop, pop. Eventually, one of these little downtrend lines popped, but that was a catalyst for a move to take out that primary downtrend line. I just had to jump back to a 4-year chart. I did to show you this trend line going back. Beautiful technical action. I believe it was highlighted at the time that it was bull flagging just above the primary downtrend line. I mean, that's a screaming buy when you see a breakout, take out a primary downtrend line. It was a little extended when it did it, so it did bull flagged to work off the near-term overbought conditions, and then exploded out of that flag pattern and ran up in just a few days, 300%. Got a little ahead of itself. That might have been price resistance here. Yep, there was certainly price resistance, a lot of reactions. So that was an objective area to book profits, pulled back. Since then, it's worked its way up this downtrend line. I had it drawn like this. You could tighten it up, but this is how I had the downtrend line drawn. And you had a divergent high. So here's another great example of one you didn't want to be buying here. And this is why I backed off a lot of these stocks recently. You guys know, if you followed the site, I was all over these things like white on rice going back, a couple years, doing videos all the time, trading them actively. And after the elections, there was too much enthusiasm. They got ahead of themselves. Everybody got giddy. There was a big run up into the elections. There was a sell-off afterwards. I clearly stated that on the site, Time to Book Profits. I thought that the everything and then some was already priced into it. Sure enough, all the majority of states that had it on the ballot passed, but it was a buy the rumor, sell the news thing. And I think that's exactly as I described it. So we were able to sidestep a lot of losses there and book a lot of profits. And then, the next wave of buying stepped in. Profit taking happened, and you can see these stocks just the majority continue to move higher. This one looks great right now. You're at a very well-defined support zone. You can see the reaction here. Some reactions there, reactions here recently. There might be some to the left of the chart, although the bigger picture says that it did just break down below that primary downtrend line. So you can buy it at support, but I can tell you could be a dead money trade for a little bit longer. Maybe, maybe not. That's the thing about a sector with a lot of momentum. You break down, you have these bearish technical chart patterns, but I wouldn't short this thing with your money, nevertheless my own. So, maybe it breaks down that level, and if it does, I would rather just wait patiently and go long, or if I already have a position, add to it right here at that 0.048 level. All right, I'm going to wrap it up here. I only went through 10 of the 38 in my watch list. Now, the next video will go a little faster because I've already, over half this video, I talked about trading strategies, things to, look out for, and, some tips on how to trade the sector. So the next one will just be a pure review of the charts, and I'll try to get that out as soon as possible. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.